Okay, hello and welcome. I'm Jason Gumpert from MSDynamicsWorld.com, and we're here for a new session in our Spring 2015 Financial Automation webcast series. And today I'm happy to welcome a new speaker for us, Blair Hurlbut. Blair is the ERP team lead at Catapult, where he works with customers deploying Dynamics NAV, Ceramic Navigator, and Acumatica. And we're always glad to have another expert from the Catapult team joining us. We've had several in the past as well. Before we get started today, I'd just like to recognize our Financial Automation webcast series sponsors. Thank them for their support of MSDynamicsWorld.com. They are Perceptive Software, Metafile, DocStar, Bottomline Technologies, and Avalara. So as we get started, please note that you can use the Q&A block or the chat that you'll see on the right side of the webcast session today to ask your questions and provide your thoughts. Blair will be making time for questions throughout the event. So without further delay, Blair, let me hand it off to you, and make sure you're off mute. All right.
Yep. Thanks, Jason. Can everyone hear me all right? Oh, second.
Yes, we see it now.
Excellent. So thanks for the introduction, Jason. Today we're going to be talking about the benefits of automation using web services via Dynamics NAV. So we're going to take a quick run through of a couple clients that we've looked at and some of the benefits for them. But first I thought I'd give you guys just a quick intro about myself. This is the first time I've been speaking on MS Dynamic World. So those of you that I've never met before, I am the ERP team lead at Catapult. I originally came from the client side, so I've been a part of implementing not for-profit version of NAV back in my former life. And then I came over to the partner side to start helping implement NAV. So I've done it. I've done implementations for profits, not for profit, upgrades, assessments, helping people streamline their businesses, and run through a lot of different processes with our clients here and potential clients. So I deal with a lot of the pre-sales here also at Catapult, so I see a lot of the pain points for people who are on legacy systems or looking to potentially leverage some of the third-party systems that they might have today and integrate those back into their ERP system. So as I said before, we're going to look at the automation use cases today. We're going to take a peek at two case studies for two very different clients that we have. One is for some purchase approvals for a oil and gas services company in Calgary. The other one is a portal integration and some automation for a non-government entity here in Vancouver. And then we're going to look at what are some of the questions that you should be asking yourself so that you can evaluate your own situation and make key decisions to possibly look at building some automation or working with your NAV partners to build some automation using web services. Okay, so I thought I should answer the question of what are web services. Web services are basically a tool set that you can leverage to publish out the application, and in this example it would be NAV, out to other applications or elsewhere within the world. So you can publish web services out to be able to integrate to portals, to integrate through different links, as you're going to see through emails that we're going to publish out. Some of the independent software vendors currently leverage web services. If you're using Jet Reports can leverage web services. I believe Zetadocs also leverages web services. So there's a lot of other tools already out there that are leveraging those web services and essentially provide a vehicle to be able to communicate between your ERP and whatever the other systems are that you would like to speak to from your application. So the two case studies that we're going to look at today, the first one is for a company called Canyon Technical Services Limited, and they're out of Calgary, Alberta. and we started working with them, I guess about 2.5 plus years ago. And when we went in to visit Canyon, they're a high growth company, but they had started from some grassroots, so they were not as mature from a process and procedure standpoint as a lot of organizations of their size at this point. So they realized that, and they wanted to bring in some purchase approval automation. The second client was that I'll be talking about is the Private Career Training Institutions Agency, or PCTIA, and they were coming from a legacy accounting system, I believe ACPAC, that wasn't quite meeting their needs from a finance standpoint, from a reporting standpoint. And then they had a bunch of other subsystems that they were also using to manage their institution or customer portals. So we were brought in to work with them to begin to develop and integrate some of the subsystems that they had into their ERP. So obviously the reason that you guys are here is to see, well, what are some of the benefits of the of having automation within your organization, and specifically how you can leverage some web services to be able to accomplish these. So typically what you're going to be looking at when you're considering some of these automation uses that you could have at your organization, you really need to start asking yourself, is the data moving between subsystems easily? Is there a lot of repetitive data entry? Is there a need to have this information in multiple systems? And where are we going to report out on this data, and from which system? Okay. The other thing that you need to consider is, I know a lot of clients want to bring in an ERP and push every piece of business-specific software into their ERP system. But sometimes there's systems that just don't, that an ERP will not meet those needs for. We have a client in Alberta who does water meter readings. And to look at customizing something like Dynamics NAV to be able to capture that type of information is not really, it's not realistic. It's not going to be cost efficient to do that when there's very specific software packages out there that already exist to capture that type of information. And it's more realistic to, say, bring in the final invoices from that software package, because there's people go out with handheld devices to take the meter readings. That information feeds back to that particular residence, which is tied back to a particular customer, which now gets tied back to an invoice. So instead of building all of those steps within an ERP, it makes a lot more sense to be able to use a piece of integration to automate the process of bringing that data in. Our current client, we're going to be looking at this in the next couple of months, because what they're doing now is manually entering invoices back into their ERP system coming from their business-specific software, which is a meter reading software and invoicing software. So that's going to be something that we're going to be leveraging web services and pulling in automatically for them, so that they can reduce the number of errors coming into their ERP and have better reporting out of their ERP system. So the first case that we're going to look at is the Canyon Technical Services. So when we came into Canyon Technical Services, as I had mentioned before, they were growing incredibly rapidly. They had essentially the typical kind of grassroots processes of, oh no, just let Bill go do the ordering and we won't really worry about it. That's where they started. The executive saw that they had limitations. Their auditors, because they became a publicly traded company, saw that there was limitations and risk associated with how they were conducting their purchasing approvals and everything around the requisitioning process. Essentially, at that point in time, they didn't really have a true requisitioning process. Anyone could walk into a store and just say, okay, the PO is Blair 1, and I would be allowed to make a purchase against that particular PO. So as the executive saw that there was risk associated with having potentially a large number of purchases and not having visibility into those purchases, they realized that they needed to implement a process for that. And one of the reasons that it was very successful in being implemented is that the executives knew that they had to have change. They had an incredibly strong IT department who could work with the functional team to work through the intricacies of implementing an approval process. And when you're implementing an approval process for the first time, it can be a little bit daunting because people are concerned that they're going to lose control. And one of the major items for Canyon was if they're going to implement such an approval process, how are we going to be able to do our jobs efficiently? So one of the main points, pain points that we saw at the very beginning was they have a lot of decentralized users that are out in the field across Alberta. And so how can we ensure that we do not slow down this process so that they can get their orders in so that we're not impacting revenue, which is the key driver for the organization. And if they can't make purchases to drive that revenue, then there's a fundamental flaw in the process itself. So the other thing that was a little bit of a challenge was creating the threshold approval. So who can approve what? Because in the past, it would typically come through emails of so-and-so can approve this, so-and-so has approved this, and invoices would start to get paid from that standpoint. Implementing a matrix, essentially, of who can do which approving took a little bit of time, but we managed to work through that. And because of their strength in their IT department and in their testing, they found all the different types of cases and situations where the approval matrix may have had gaps at a particular point in time. Okay. And so when we looked at the solution design with Canyon, what we looked at with them was there could be multiple approvers available for a particular division or department for them. So we wanted to be able to leave that open and not limit it down to only a handful of approvers. And you'll see that when I go through the example that you can essentially configure this however you want to be able to select from different approvers. Because again, time was of the essence for some of these purchases, so that if they know someone is away at a particular point in time, they want to be able to select an alternative approver at that point in time. The other areas that were a big concern was we needed to have a system that would send off an email, attach a PDF of the particular purchase requisition or quote that was being created, and then we also had to give the ability to accept or reject that particular request for a PO creation. So if an executive was in a meeting, they could see on their BlackBerry or on their iPhone or on their Android device, they would be able to see an email that would come in. They would just click on the hyperlink to approve it after they review the PDF, and it would automatically create the PO for them. And then the last point was they wanted to limit access to PO creation. So how they did this was using NAV profiles, remove some of the functionality to be able to create POs directly, because in the past, all users could create POs. So it would not have been a very successful process if we continued to allow that to occur. So I'm just going to flip over here into their environment right now, and I've already created a bunch of purchase quotes. So you'll see here, and I've actually came in into a role center that is designed specifically for purchasing, for people who are doing purchases at Canyon Technical Services. So one of the nice things that Canyon has done is they've done some grouping of the purchase quotes, because essentially the process starts with a purchase quote. The quote is approved, and then a PO is generated from that point in time. So very similar to a requisitioning system. You need to go through a purchase quote in order to generate the PO. And so they've changed their profiles here to be able to see the very specific functions of either going through a purchase quote, seeing my purchase orders that I currently have open. If I have any that are not fully received at this point in time, I can begin to filter through the lists, or I can go through and see any approval entries that are waiting for me at this point in time. So they've done a very nice job from grouping the functions that a user would require. So the area that we built for this particular client was around the approval matrix. So right now, this is essentially how we've built out the approvals for a specific user. So you can see me down here. This is the very last user. I'm currently set up to be an approver. I can approve purchase quotes at this point in time. I can approve for a range of GLs or all GL accounts at this point in time. There's also some options here to be able to approve any fixed assets that are purchased, because this is a large service company, so they do purchase very expensive fixed assets or components for those fixed assets. So they needed to have an additional level to be able to approve purchases for fixed assets or for inventory items. So we allow people to also purchase and approve based on inventory items. We also allow ranges or individual division codes or department codes. And then we have the amounts over here. So you can see Ramin at the very top here can purchase up to $10 million. Myself, I can purchase up to $5,000, but anything above that, I'm going to need an approver to review this particular request on my behalf. Okay. The other thing that we built for Canyon was the ability to have essentially a lower threshold amount to be able to purchase for all users. And what I mean by that is anything under $1,000 or up to $1,000 essentially automatically goes through the automation process. It doesn't require approval at this point in time, because they didn't want to bog people down with small purchases that they were making. But this is system-wide. We could change this to 500, or we could put it up to 1,500, depending on the analysis that we would do on the number of small purchase orders that are currently being created. So I'll run through a couple examples of what I mean by this and how I've kind of laid it out. So I've built some quotes already here for the good folks at About Staffing. And so this first one here is a $950 quote at this point in time. So if I go to send this for approval at this point in time, because it was under that $1,000 threshold, what's going to happen is it's going to automatically send this out. It's going to be approved because I am allowed to approve it because it's under $1,000 at this point in time, and all users are able to send that out because it's under $1,000. What it's doing right now is it's generating an email, and it's actually sending me the final purchase order, and that's currently hitting my, will hit my inbox at this point in time. Okay. I just saw that I clicked that off by accident. I'm going to re-release this. And
Hey,
so,
Blair, there's a question that came in.
yep, go ahead, Jason.
So do web services use a NAV license?
They typically do not. You do set up a service account, but because it's concurrent users and it's typically run so infrequent, um, it doesn't take up the license at this point in time. Okay. You do set up a user for authorization to make sure that the application is picking the correct user and a valid user to protect the system from that standpoint, but it shouldn't be using a license at this point in time. So sorry, now that I have this open, it's now telling me that my quote has been converted. I'm just going to flip out of here just for a moment. And at this point in time, what you're going to see here in my inbox is that this purchase order has been created. Okay, so it's the web service has gone out and sent out that automation. It's attached the purchase order PDF at that point in time and sent that out automatically. The next two options that are quotes that I've created at this point in time, one is for would fall within my threshold. I'm not going to show you guys that one again because it'd be very similar to the one I just showed you. But if I go in and edit this guy and make it up to $50,000 amount, what's going to happen is when I click on the send approval request, what you're going to see is the list of everyone that can do the approval. So this was based on the approval matrix that I had just shown a moment ago. So I can see that Ramin is the person that I would want to send this to. I would just highlight him, or I could select an alternative approver. So some of the executive team at Canyon is being shown. I could select them if I wanted to. I'm just going to click on Ramin, and same process is going to occur in the back end. The web services are going to go out at this point in time, and they're going to generate an email, and they're going to attach the PDF. It's going to insert the approve or reject hyperlinks at this point in time, and then the approver can go in through there, either through their email. So this would be the type of email that would be that would hit a particular approver's inbox. So at this point in time, the user would flip open the purchase quote to say, okay, here's the purchase quote that I am looking at approving. And from here, they can click on the approve, or they could reject this particular quote. So what we were able to accomplish with Canyon was the ability to give them the decentralized purchasing model that they were looking for. We were able to give them visibility and control into their expenses that they were currently incurring. And one of the things that Canyon did to ensure that all vendors were accepting purchase orders at this point in time, because it was such a fundamental change, is they wrote their vendors 2 or 3 times prior to going live with this functionality and told them that they would stop paying any invoices if the vendor did not have a purchase order at this point in time. So the vendors needed to get on board also to ensure that they had a valid purchase order number in order for them to get paid. So they were more diligent with the Canyon staff to ensure that they had gone through the proper channels to have a PO number generated so that they would get paid in the end. And Canyon was very open around the PO numbering that they were going to be using so that the vendors could see that it was a valid PO and people were no longer giving their names as a PO number moving forward. And this allowed Canyon to have a very defined process with no workarounds for generating POs. It also started to show them exactly where they were sitting from an accrual standpoint for their purchases on a monthly basis because they had purchase orders now in the system, and users were expected and began to do line level receiving and do partial receiving for items that weren't received as of yet. So their accruals that they were putting in on a monthly basis were no longer estimated as they had been in the past, which the auditors didn't really enjoy at that point in time. So they were able to really lock in on a specific number of what was happening within their financials from a receivables or a payable standpoint, and they were able to provide more accurate reporting for their auditors, which always makes their auditors happy and makes the executives happy in the end. The other thing that this process really helped with was it didn't slow down the process. And that was absolutely critical for this process and implementing this for Canyon. If we would have slowed down the process, then it would have been rejected by users. They would have found other workarounds, and they would have continued on doing business the way that they had in the past. But because we were able to give the very simple option to approve a quote via an email or go into NAV if they absolutely had to, but the key was to be able to do it quickly, do it efficiently, give the approver all of the information that they needed to approve the particular quote or PO, and they would be able to run through a system that worked for them. I don't know if anyone has any questions specifically around how that process worked. I can take any questions around that. Essentially, from a technical standpoint, how NAV works is essentially you would have a published web service that would be running in the background. So this is essentially what we created for Canyon that we would publish out. And you can see this particular code unit is the one that we had developed for them, along with some other web services that we have running for them. But this is the one that was running in the back end. And essentially in NAV, you publish these web services, allow the service to be picked up or sent out, in this case, out via SMTP server and get delivered out to the specific users.
So Peter asks, what happens to an email approval request with no response?
With no response, it would just sit within NAV, within the approval entries. So essentially what we tried to do is leverage as much of the out-of-the-box NAV approval items that we had. So you can see here there's a particular quote that's sitting here. You'll see the date and time sent. This is our test database, so some of these are a little bit older, but this one was sent in on the 9th of April, so it's just sitting here at this point in time. People can do delegate, or they can reopen them if they need to and send them off to a different approver if need be. Okay, and you'll see here, if I go to my quotes, I'll see all these ones that are currently require approval or pending approval. So again, we can go back in. If we needed to, we could open these back up and send them off for approval. Okay, so we could cancel the approval request at this point in time. And what you'll see is an email will be generated at this point in time. It'll go out to the approver, and it might go to the original requester if I was canceling this on behalf of someone else. And then the status for the request will flip back into the open status, and I could come back in here and find a different user this time because I know Ramin's out of the office or he hasn't responded. I can go in and select Cecilio who's also a Catapult consultant here. I could send it off to him for approval at this point in time. The other thing that you can do with having these approval entries and requests is that you can start to build some reporting off of them to see how long it's actually taking people to do the approvals at this point in time. So you can kind of find out who the slow approvers are versus the quick approvers. So here's the approvals that I had put in today, the one for the 50,000 and the one for the 15,000. So those are sitting here right now, awaiting for Ramin to go in and make the approvals on these particular items. Okay. Does that answer your question?
Well, the person who asked it can feel free to write back in if they have any other follow-ups, asking anyone else.
Okay.
And they responded it does, so yep.
Perfect. Okay. So I'm going to move over to the portal integration that we built for Private Career Training Institutions Agency, or PCTIA. It's a very long name, so we typically only refer to them as PCTIA. And so they're a non-government entity. Actually, they've just been pulled back into the government. At the time, they were a non-government entity when we began to implement this automation for them. And essentially, the reason that we went down this path is that they had a legacy ERP system. It had very limited reporting. It had no subledgers for the receivables, and essentially PCTIA's business model is that institutions register with them, and they are their customers, so they're all of their receivables, and they have with them an associated rate based on the status and standing of the institution. So a new institution coming into PCTIA would pay a higher rate than someone who's been registered or accredited with the organization for multiple years and have been in good standings, meaning they pay on time, they submit when they're supposed to submit their monthly tuition. And so they pay a slightly different rate, and this is all governed based on the standards set out by the board of the organization. They were also looking for a change in their technology platform because they were running a lot of different shadow or subsystems along with a legacy finance system. They decided now was the time to make an investment, reduce some of the risk of having these third-party systems, and finally make sure that the systems integrated between each other. They have a very unique customer portal, or as they call it, their institutional portal, where people from the institutions can log in, and they essentially indicate to PCTIA how much they're going to be paying for a particular month based on the tuition they had received in that month. And so we worked with them to build an integration point, which I'm going to demonstrate for you guys today, between that particular portal and some of the custom rate tables that we built for them within NAV, because this is a very unique business model that they have. And so with their current model of having these homegrown systems or third-party systems, there was a higher risk of losing support for those particular applications. If someone was to leave the organization or if there was any other changes to the platform that particular technology was built on, then they might be losing a fundamental system. As I mentioned before, they didn't actually have a subledger for the receivables, so we made sure that that came into NAV so that at any given time they would be able to report on the receivables within their finance system versus through a shadow or third-party system at that point in time. And then we also wanted to bring in some standards around how does the data and how can institutions submit their monthly tuition to PCTIA, because it was a major pain point for them of people submitting the same month tuition. They would say, okay, I'm submitting for April, but they would submit 5 times. You should only be allowed to submit for the month of April once and move on to the following month. So we built in some procedures within the web services and automation to work with their portal to display information properly. Okay. And so when we went into the solution design, obviously there was multiple touch points between the portal and NAV. We had to establish, first of all, what institution is currently logged into the portal. When is the last month that this particular institution had submitted their tuition for? Based on the month that they're submitting for, what are their current rates? Rates could change for institutions throughout the year, or Pictea could change annually their rates based on direction from the board. So we wanted to look at automating all of these processes together and make it a lot simpler for the institution to be able to submit their money and give visibility into for the people that manage the institutional receivables, visibility into what month an institution had submitted for and where they are in the current payment process. So I'm just going to flip over now into another test company here. And so you can see right here is Blair's Testing Company. So this, if I drill into this particular customer at this point in time, and I'll navigate over here into what's called a customer status table. So you can see here there's a bunch of different, it's essentially a custom table that we built for them. You can see there's different creation dates within here. So you can see on these particular dates, I've gone in and started to build out very different monthly tuition submissions. And so as I mentioned before, you can see that there's a status and a standing, and this impacts some of the fees that an institution pays. So this table is essentially going to get updated via a connection through a web portal, which is where the customer logs into, and then the web service that we built for them. And because we did a lot of testing with Pictea, what we ended up doing was we built this little tool here that sort of mimics a website. So this is the web service right here, and this is the same particular web service that the portal would be pulling towards. This one's a development one. But if I connect to the web service, I then put in the particular institution ID at this point in time, what's going to happen is it's going to tell me what was the last submitted date. So this is all using the web service already. As soon as the customer comes in, the portal just passes us this particular number, which is the unique key to tell us, okay, we now need to come back to this particular table and we need to figure out what is the last month submitted for. And that's a particular field over here. You can see right here is they haven't submitted since February of 2014. So now I'm going to provide back this particular guy of March of 2014. And so that's what gets passed back at this point in time. We also have the ability to pass back is there a credit amount on this particular institution. And you can see right here they have a $500 credit. The next step from the portal that would happen is the institution will put in their amount. We would tell them you're submitting for March 2014. They would now come in here and say, okay, I had $100,000 of tuition. They would click on a button to submit this via the portal. And what happens at this point in time is an invoice is automatically posted within NAV. It tells me the amount, which we pass back to the portal. So we can tell the institution that you now owe $1,600 and change at this point in time. I can apply a credit memo, and I can also make a payment against it at this point in time. And so what happens if I come back into this particular table, you'll start to see here is that a new invoice is being created at this point in time. And so if I wanted to view that particular invoice, I could come in here and see the lines that have been generated automatically. And we know that this has come via the web because we've given it a unique posting description, and we've given it a unique sales invoice number at this point in time. And then I can start to see, well, what are the lines that were created? And so what the web service does is it takes that $100,000, and for two of the percentage fees, it says it's the quantity of $100,000 times these two percentage fees to give me my amounts for those. Based on my status and standing and my annual tuition amount, it also puts in this fixed fee line of $641 and change, and that's all calculated via the web service, leveraging this particular table. Okay, and you'll see that this guy is being submitted now. And so what will happen now is, because this was March, submitted for the month of March here, so this was the month that the institution received the tuition for. If I was to come back in here and say, okay, now retrieve me my last submitted, you'll see that my credit amount has now disappeared. It's updated to say that I'm into April instead of March, and I can put in a different amount. Say we had $150,000 worth of tuition received in this particular month. What will happen is it will update and tell me that now I owe $2,200. I'd no longer have a credit memo to apply, so that wouldn't be applicable, but I could post a payment. So this post a payment actually uses another web service, and we essentially integrate it back with PayPal so that people would be allowed to submit payment through PayPal. And if they were to click on this particular guy, again, it would go through here. It would post the particular invoice that we were looking at, put in the amounts, tell me the total amount that it had invoiced, give me some of the GL accounts for reporting purposes, etc. And it would apply a payment back against this particular invoice at this point in time. So if I navigated back to the customer ledger entries, I could come in here at this point in time, look at the ledger entries. And so if we get to the bottom here, you can see there's an invoice and then a payment, invoice payment, etc. So you can start to see that there's a lot of different payments that are going through, and they're closing off against the invoices as they're created. So what we did with this particular process was we took the process out of the hands of a receivables person. We also took away the ability to submit for incorrect periods for the institutions, and simplified the entire process and provided them with a full subledger. As you can see here, all of their customers' invoices now come through here, and you can start to see that we've built the automation to make everything as simple as possible, and to also have integration between their institution portals or customer portals back to their receivables at this point in time. So as I just said, reducing the errors from the client portals, essentially simplifying the entire process where we could, both from the accounts receivable and the institutional standpoint. And the last point, which was, I think, really the biggest win for them, was having the data in one repository. And being able to pull all of this into NAV allowed us to provide different views into the data. And what we actually ended up doing with this data, now that we pulled it all into essentially one custom table for them, leveraging as much base NAV as we could, what we started to do was publish this particular data out into Dynamics CRM, which also leverages additional web services to push the information out into a tool set that users at Pictea that manage the institutions themselves could log into without using a NAV license and looking at it from a customer-centric system such as CRM to see, is this person in arrears for any of their invoices? What is their standing at this point in time? And they could look at that via the CRM. And so having all of that automation built allowed us to start to publish out that particular data. Does anyone have any questions around the Pictea integration and the web services that we built for them?
So Blair, there's no questions yet, but we can certainly take a minute here to see if anything else comes in.
No, I think we're kind of right on track where I thought we would be. So if no one has any questions around that, we can just flip through the last couple of slides here. Okay. So where can automation help you guys? The things that you guys need to look at when you go back to your desk is what kind of systems are we currently using that are either shadow systems, third-party systems, and how can we get that information into our ERP system or into our CRM? And essentially what you need to start looking at is how much effort is it going to take for us or how much effort does it take us today to enter that information into possibly multiple systems? What is the risk associated with having it in these multiple systems? Am I able to get the reports that I'm looking for today? If you can't get those types of reports that you're looking for today, would you be able to if you had them into one integrated system? And then one of the last questions that a lot of people don't think about is, are we meeting our clients or our customers the mandate to those particular clients or customers and delivering the work that we're supposed to be delivering to them efficiently, or are we essentially managing through additional systems? So there's a lot of times especially from the sales side of things, we'll go in and visit a potential client and we'll see they're entering into three different systems the exact same information, and they're essentially employing someone full-time to do a process that doesn't add a lot of value to the customer or to the business itself. Not to say that that person couldn't add a lot of value. It's just they've been asked to fill a role of entering data from system to system to system, thinking that this is the best way to currently do things. But most of the times what you'll find is that the client is being underserviced because we have resources in our organization versus look customer or client. And so what you should be looking to accomplish is tie together all of these third-party systems or any systems that you're currently doing manual entry into. And so if you look at the example of Pictea, how they were putting data into the system, and it's not so much that they were manually entering data into their essentially what they called the database, which was their accounts receivable subledger, is that they didn't have any reporting to be able to tie back via their ERP system. They could report solely on these institutions and what they owe, but that didn't translate into a dollar amount or any other type of analytics, such as one of the requirements or one of the ways that Pictea slices and dices information is the institution a registered, accredited, or suspended or probationary institution at this point in time. It wasn't simple to get that type of data out, even though executives and people within the organization were asking for that type of data. They just didn't have a system to be able to provide that. The other thing that you want to do with automation is making sure that everything is in sync. I know with a lot of legacy ERP systems, you can leave your subledgers unposted so that they become out of sync with the GL at one point in time. And what we want to make sure that we're doing is we're not leaving a gap where someone might underpay, overpay, not be charged for something because a third-party system or a shadow system has the data and your ERP system doesn't contain the same data. And that happens quite a bit where people don't really know if the information or have a procedure to know that the information has been entered between two systems. So making sure that we can tie all of that together is critical. And then the last one is essentially we're doing mapping possibly between multiple systems. So making sure that there's a standard between those. The folks at Pictea made sure that CRM was actually their customer master record. So if an address change happened for an institution, we would pull that data back into CRM or from CRM into NAV to make sure that those two are in sync at any given time. So it allows you to do that mapping. It allows you to have standards within the data that you have within your different systems if you are going to have integration, and allows to simplify processing, which in the end should free up resources to be able to deliver whatever mandate your organization has, be able to deliver to your clients or customers that particular mandate. Okay. And so if you guys want to see any of the slide deck or get a copy of the slide deck, you guys can email me directly just at blair@catapulterp.com, and I can provide you guys with the slide deck from today's webinar if you're interested. Or if you have any additional questions that you'd like to follow up with me, you can also email me through that email address. I'll open it up now for any other questions. And
all right, thanks, Blair. Yeah, and just to add to that, there was a question on the recording as well, and this is being recorded. We'll be posting that online, and we'll send an email alert to everyone who registered. Really great group of folks in the audience from, I counted about almost 20 countries represented. I'm pretty sure there's folks on the line from Australia, obviously North America, various countries in Europe and Asia as well. So great to have everyone on today. I think we will start wrapping up. I don't see any other questions in the queue here. Blair, thanks so much for taking the time to share these solutions with us and explain web services.
Excellent. Thanks for having me.
And thanks to everyone for their questions and their attention today. Please look for the survey as you depart. We really appreciate the feedback on our sessions, and our speakers appreciate that as well. So that concludes today's session. Thanks, and have a great day.